The good, the bad, and the ugly of real estate investing. That's going to be the subject of this video. Welcome, my beautiful people. As I mentioned in my weekend review, or in that weekend review, I gave you an overview of some of the challenges in today's market as it relates to real estate investing, and in particular, short-term rental investing. Today, we're going to dive deep into this subject, and I'm going to be using and giving you information on a very popular and very seasoned investor. So you can see that whether you're a beginner or a seasoned investor, things can happen to you and not in a good way, right? And I'm talking about David Green. If you don't know who David Green is, David Green was a member of the Bigger Podcast. He's a real estate investor. He is a owner of a mortgage company or mortgage brokerage. He has a real estate brokerage. He's an author, best-selling author. I mean, the man has done a lot, but he's also made a lot of mistakes. And one of the reasons why I want to do this video is so that you can understand that real estate investing is for me especially, a phenomenal vehicle to build wealth. If not done right, it can be a true pain in the butt. And more importantly, it can really ruin you financially if you don't understand what you're doing. I tell people all the time, if you have a very good W-2 job and you like what you're doing, keep doing that. Invest in real estate, because I firmly believe it is the easiest and fastest way to wealth. But let those individuals that you trust, that you vetted, handle most of the work. Let's get right into it. And I'm going to start sharing my screen. I'm going to get right into the podcast. Now, this podcast, Ryan Pinella's podcast, and David Green was really vulnerable in this podcast, and really pay attention to some of the stuff he's saying. Now, I'm going to stop it and I'm going to give you some feedback because I don't want to air the entire thing. And then we're going to go into some of my personal pros and cons. But right now, let's get
such a season.
Podcast.
I mean, that leaving the show was like the cherry on the top of a terrible Sunday. It's been just thing after thing after thing going wrong. So I'll try to give you an overview, and I'm going to miss a lot of it. But about 2.5 years ago, somebody figured out how to steal title to about 40 properties that I owned in Florida.
Whoa.
Successfully stole them, sold them to other people as a wholesaler. I found out about it, got the police involved. They caught the guy. He was convicted. But during that process, I lost control of the properties, and the majority of them were turned into trap houses, drug homes, prostitution, stole all my copper, stole my...
Let's stop the video right there. Talk a little bit of what he's talking about. First of all, a little bit of history. As I mentioned, David Green was part of the Bigger Pockets podcast. He was recently let go, fired, whatever you want to call it. Bigger Pockets decided to go in a different direction. But during this time frame, David Green went through a lot of heartache. A lot of things were happening. You guys all heard the saying, when it rains, it pours. Man, it was a hurricane for David Green. Besides learning that he's no longer going to be part of the Bigger Pocket podcast, he also was dealing with a lot of legal issues and a lot of betrayal within his organization. Let's talk about what he just mentioned. He owned some properties in Florida. I believe most of them were at the ones that I'm going to talk about were in the Jacksonville area. He put all those properties in an LLC. A lot of people do that, and a lot of accountants, a lot of experts will tell you that you should put your real estate in LLCs. Now, I have said this a lot. It's not something that you really need to do, especially if you don't have a lot of properties. And I highly recommend that you sit down with a real estate attorney and accountant to figure out what best works for you. But in this particular case, David Green decided that they should all be in LLCs. But what happens when what ended up happening was that these individuals that he's talking about were able to change the registered managers of those LLCs, which in turn gave them, I don't want to say ownership, but gave them access to the property. Because once they were able to hack that, falsify some documents, and actually change the registered owners, they owned the property. The registered managers of that LLC actually owned the property. David Green will talk, and you'll hear him say that he was able to get the stuff back. It was way down, long time after this has happened. and long after a lot of things went bad within the property. The lesson here is that if you decide to do that, you have to have processes and procedures in place to make sure that someone is checking on those LLCs to make sure that you still are the registered owner, because things like this can happen. Let's continue.
Air conditioning units, like the whole thing went to hell. So when I finally got those properties back, they were just in terrible shape. The tenants hadn't been paying rent because they had all left when the guy showed up at the house to try to get rent from them instead of me. And I had to sell them all to a hedge fund before someone else could steal them, because the state of Florida said, hey, we can't stop this from happening again.
What?
Yes.
It's just a thing in Florida,
it's
period?
a glitch in their website that manages the legal entities. It hasn't had to do with the county.
All right, so I'm going to stop it right there for a quick second, because one of the things he said, I don't necessarily agree with. He said he had to sell them to prevent from this happening again. That's not true. You don't have to sell. You have to put processes and procedures that will catch these kind of things if and when they happen, right? Had he had that, had he had someone checking on a regular basis, he would have saw there was an issue, somebody changed the name, and he could have stopped it before anything happened. Let's continue.
The assessor's office that manages title. So basically their website had a glitch in it where you could go in and you could add yourself as a
registered agent, whatever,
of that LLC,
right,
which gave you some authority now if you could pay off a notary or something to legally, not you're doing it illegally, but the title would legally be moved to your entity. Then you go register that with the county and boom, that title's yours now. So
holy moly.
I had a judgment issued in my favor from this, but it was catastrophic financially. And I had two people I just hired to work for me that both had to quit because they couldn't keep up with the pressure trying to deal with this. So I'm pushing to a 1031 now, and that goes bad on.
Before we go into what went bad with his 1031, let's touch on one thing he just mentioned, right? He said he had hired two people to handle the properties and handle the situation that was happening in Florida. You've heard me say this before, and I believe I said this in the beginning. Growth is great. If you have a company, you want to grow, but you want to grow in a controlled manner, right? One of the major issues that happened to David Green was that he blew up. He grew so fast, so quickly, and he didn't have these proper policies and processes and procedures in place that allow some of this stuff, if not most of this stuff, to fall through the cracks. I can't express that enough. You want to grow, but you want to grow in a controlled manner, and you want to make sure that you have the proper people. He just talked about he hired two people who had to quit because they couldn't handle not only the pressure, but the amount of work that they had. Number one, he should have realized, hey, I have so much work, I need to hire more than just two. And maybe that would have alleviated some of the problems. He already had the problem, but he compounded the problem by not hiring enough people to actually do the job. So let's continue.
On the very last day of when I have to identify the properties, now I got to buy like $12-15 million worth of real estate in one day.
Oh.
So, yeah. So I have a guy who's my agent that was a referral from a business partner. Turns out that the guy is a horrible person. Made about $250,000 in commissions off me buying all this real estate, and then add some stuff to the contract that I didn't know about. My assistant signs the contract, not knowing he had snuck something in to move it from 1 year to 3 year contract when he made some revisions. He knew we weren't going to look at it. And then doesn't advertise my short-term rentals on Airbnb or VRBO. He was supposed to.
Let's stop it there again. As I said, when it rains, it pours, right? Again, he went ahead and he hired someone else, in this case, a real estate agent, to help him find properties because he had a deadline. When you're doing a 1031 exchange, you have only so much time or specific time frame to go ahead and reinvest that money in another asset, another vehicle, right? Hired this guy. Clearly, he did not vet the guy. Just came as a referral, and because it was a referral, he took it for granted that this person was going to do what he needed this person to do. He doesn't clarify much about what was his criteria when buying. Doesn't clarify the property he bought, were they good purchases, meaning did the numbers make sense? It doesn't clarify that, but it did say that the person wrote up a contract that he didn't read, that is, the people he had and the staff didn't read, and that this guy knew he wasn't going to read it. Okay, that's a problem again, and I get it. Listen, David Green, in this particular time, running the Bigger Pocket podcast, was writing books. He has multiple books, running a mortgage brokerage brokerage, running a real estate brokerage, having to deal with all the fires that happen with any business, but more importantly with a real estate investing business, right? Do your due diligence. We're going to hear Ryan Panetta ask him this question in a second, but do your due diligence and trust but verify. Let's continue.
I tell him, hey, you have to do this per the contract. He uploads pictures from the MLS that were horrible. I bought like the ugliest houses I could get my hands on. He's doing direct booking to be able to make more money. And then more importantly, the bad reviews his company is getting are not transparent. You can't see them because it's all being done directly through his company. So the Airbnb and VRBO, when they finally put it up there, I can see we're getting 1, 2, 3-star reviews on all these properties. They're dropping to the bottom of the algorithm. The properties are just doing terrible. And when I finally tell the guy, dude, I put up with enough of this, I'm taking them back, threatens me with a lawsuit for
the 3 years.
Yes, because it's breach of contract, basically. So he's done terrible the whole time.
Here's the lesson here. He already mentioned his team did not read that contract or did not read it, was not detailed in reading this contract. One of the clauses that I highly and we have it in our contract, and I highly recommend that you look for when you're hiring a property management company to run your properties is the termination clause, right? That termination clause, like for example, in my case, I don't do long-term contracts. We do month-to-month contracts. I firmly believe that if you don't want us to manage your property, that we shouldn't manage your property, and vice versa. If I don't want to manage your property because we're not a good fit, then I want to have the ability to exit that contract without penalty. So we have that in our contract. That contract is month to month, and we have the only time I will change that is if I'm actually investing money prior to taking custody of that property. I oftentimes do that. We'll take a property from an owner that's distressed. We'll go into agreement that we're going to be part owner of that property or we're going to get a higher commission in that property. If we do the repairs, we do the stage, and there's certain things, and I'm not going to dive deep into that. But the point here is that you as an investor, you as a property owner, it's one of the clauses and contingencies you should be looking at in a contract. Clearly, they didn't do that. It was a 3-year contract, first of all. I personally would not sign a 3-year contract with a company that I don't know, right? There has to be some performance clauses in there. And those performance clauses weren't there. So keep that in mind when you are trying to hire a property management company and what to look for in a contract. So let's continue.
Wait a minute. How did all of this happen?
At the same time.
Well, same time, but also during what failed during due diligence?
So
all right. There's the question, right? There's the question. What failed during due diligence? Now, listen to what he talks about. Has nothing to do with why it failed. He's going to get into some of the things that happened as a result of the fact that due diligence failed. But you, as an investor, and I've already said this multiple times, you should always trust who you're hiring if you hired, if you took your time to hire. But you should have your processes and procedures as to what you need. And you should verify when someone provides you some information, you should verify. There's a couple of things that, and I'll go back to the properties up in Jacksonville. When they stole the properties from him, those people were going around collecting rents. And he mentioned that some of the tenants found that suspicious and they stopped paying rent. I would have known right off the bat if my rents are not coming in or somebody else other than my company is collecting rent. He doesn't explain it. And there has to be obviously a lot more to that. You have to be on top of your investments. All right, so let's continue.
Selling this portfolio of Florida properties, you have a 1031 company that is the intermediary that's going to collect your money.
Yeah.
You have an escrow company that's facilitating the sale.
Yep.
The escrow company sees a lien that was recorded for $550,000. I had a second lien for the same amount on this property because what I basically did was I built up a line of credit with the bank. When I hit my line of credit limit of $550,000, I refinanced that into a blanket loan and then built up the line of credit again for $550,000. The blanket loan, the title company or the escrow company found that and paid it off. I think what happened is one of their...
All right. Again, that explanation that he's giving has nothing to do with his due diligence, right? Now, he does go on to say that the title company, there was an issue with accounting, so there was 2 liens on the property. They only picked up one of the liens on the property. He goes on to explain that. Keep in mind, like title insurance, it's only for the buyer and it's not the seller. Right? He's the seller. He's trying to sell these properties. And he had those 2 liens. Well, that became an issue because it was found out about. And again, he's on that timeline to purchase these properties or to sell these properties. Again, it's just a big mess. Let's go on to another topic here.
I guess like for me, when I'm looking at it, I'll share. I don't want to make this about me, so I'll share some of my own things in a minute. But I guess for you, like, where are you at mentally today with all of that?
There's other deals with like a guy that was supposed to be a friend, ripped me and a lot of other big name influencers off, selling us properties. You go through like emotional betrayal, you'll feel, and then
right. Another example, he went with another guy that ripped him off.
you go through like this, almost like a hopelessness. Like, I don't know how to get out of it. Maybe I can't get out of it. Right. And one of the things I had to learn to do was to be okay with the reality that I could lose properties. Like, that in my mind was never acceptable. Like, if I give my word on paying back this loan, I will drive that Camry till the wheels go off, but I will pay back those debts. And it was incredibly painful just to accept that I might not be able to. Like, that level of failure was just not okay. I think I had to accept that I'm never going to not.
All right. I'm going to touch on that for one quick second. Okay. As I mentioned, especially depending on how long you've been a real estate investor, we're going to make mistakes, right? I personally, and back and during the crash of 2007 and 8, I purchased properties during that time. Again, over leveraged properties, bought them out of state, made a lot of the mistakes that he currently is making, didn't have the right property management company. They stole almost everything inside my property, right? We're all going to make those mistakes, but we're going to learn from those mistakes. And David Green is going to talk about some of the stuff that he learned through that. People, doesn't matter what you do in life, there's going to be risk involved. And for me, by making mistakes is how we learn. You know, you learn more through your mistakes than through your successes. And you can't be so risk adverse that you do nothing, because in my opinion, that is the worst thing you can do. So many people, especially when they get my age or older, have tons of regret because they didn't do certain things, right? It could be whatever, but the fact that they didn't do it is what they regretted, not the stuff that they did, the stuff that they didn't do. And when you're going to invest in real estate, again, I'm a big fan of real estate. This is just a cautionary tale that I'm giving you, because a lot of the people, a lot of gurus out there will make you or have you believe that real estate investing is easy, that you're going to be an instant millionaire when you do so. That couldn't be further from the truth, right? It is very difficult. It's a slow process. You're not going to be a millionaire overnight. If you do it right and you hire the right people, 10, 15 years down the road, you're going to look back and say, holy smokes, I did good, right? So let's continue.
Not be able to pay debts because I was just selfish and was like, what's my money and I want to keep it type of a thing. But if those circumstances happen that are outside of your control, and I did lose all these houses and all this opportunity, it's better to have had it and lost some of it than if you just never had it at all. Mm-hmm. Right? And you have to remind yourself that you can get it back, or the things you learned on this journey will still benefit you in your life in some way and benefit other people. And the positive side to me is, like, I don't think anybody has ever gotten stronger with a workout that wasn't hard. Nobody has ever grown more mature without dealing with some kind of adversity, right? So right. If your goal is to be a person of influence, to be someone that can make a difference in the kingdom, to be a
ding, 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 ding. Oh man. As I just said, people, he just confirmed and edified what I was just saying, right? and he used the analogy of working out. You're not going to build a supermodel body by doing easy stuff. It's gotta be difficult. You're not gonna grow in any aspect of life by doing easy stuff. It's going to be hard. You have to push yourself. You have to challenge yourself if you want to be successful in life, period. Now, let's go into, I'm going to dive even deeper now into what some of the pros and cons, some of the challenges that short-term rental operators have. And I touched on these in my weekend review. So the first thing is capital, right? When you invest in any vehicle, you need capital, you need money, right? Whether it's the stock market, Bitcoin, or real estate, you're going to need some kind of funds to get in there. Now, in the real estate side, one of the reasons I'm a big fan of real estate is that there is a way to invest in real estate using other people's money, right? But this is not that video. But understand that there is a way. If you want to learn about that stuff, buy me a coffee. We can discuss that later. But that initial capital can be super high or it can be zero, but there is going to be a financial component to investing in real estate. Number two is going to be the market volatility, right? And here's what I mean by that. Depending on what type of real estate investor you are, it's going to depend on the risk level. So for example, for me, the most riskiest way to invest in real estate is through development or what's referred to as house flipping, the most riskiest. But it also has a high return if you do it right. But there's a lot of issues there because you have to time the market, and construction costs may go up while you're in the project. You may have some local market fluctuation. If you borrowed the money, you may run into interest rate issues. So that's what I mean by market volatility, right? And then, depending on how the market is, will depend on how quickly you sell that product. Next is going to be the management side of the house. This is where I think David Green had the biggest struggle. Buying property wasn't a struggle for him. Finding money to buy property was not a struggle for him. I don't know what his total number was, but I recall on one of his podcasts, he had bought over 50 properties in less than 6 months. I mean, that's crazy to me because how do you control that? And again, he did it. But the management side is critical. And what I mean by that is making sure you have the proper people in place, right? When you buy a property, the biggest thing is having that property management company that's reliable, that has a track record that you can trust, right? That is huge. I've already gave you my story. Before I started a property management company, again, back in early 2007, 2008, I bought several properties out west and I had to hire a property management company. But like David Green, I didn't vet the company. I actually took the advice of the person who sold me the project. And at the end of the day, we short sold that property, so I didn't lose all of it, but I lost a lot of money during that time. The next challenge within management as well is the legal aspect of it, and we talked about this already in terms of the contracts that you have to watch out for. The next we're going to talk about is liquidity, right? And real estate. Every real estate deal is not a liquid asset. Now you do have cash flow coming in, and if you bought right and it's cash flow positive, that's a good thing. But you have to understand that for me, real estate investment is not short term. It is a long term investment, and there's going to be some costs associated, and we're going to go into that in a second. But the other thing in terms of liquidity, when you do sell, take into account that you're going to have to pay some fees that a lot of people are not aware of, like agent commission fees, closing costs, and potential capital gains that you may have to pay that will eat into your profits. So understand those numbers. The next one is a very big one. And I'm going to go back to David Green's. In David Green's case, he didn't talk about it in the podcast, so I'm very interested to hear how he was handling maintenance and unexpected costs, right? When you own a real estate asset, it is a constant maintenance issue. or you're going to have a constant maintenance problem. You have to maintain that property. So, you have HVACs, you have roof, you have a lot of the minor repairs, especially when you're in the short-term rental business. You're going to have guests that damage stuff here and there. Now, it's not a cost to you, and I can tell you that we have a positive in that. And this is why I don't do long-term. I only do short-term, is because I can negate a lot of this maintenance cost through my guests, right? Next component within that cost is going to be insurance and property taxes, right? You have to take into account that most, like for example, if you're familiar with having homestead on your property, because it's an investment property, you don't have that. And then your insurance cost is going to be higher. Especially today in South Florida, insurance is super high. Now, I'm self-insured, best thing I ever did, but that's a subject for another video. The next, and this is going to be another reason why I don't do long-term, but there is risk in short-term as well, and that is as it relates to tenants, or in my case, guests, right? When you invest in real estate that involves long-term tenants, you have to understand that there's a lot of risk involved, and in most states, you don't have control, the tenant does. Another reason why I only do short-term rentals, because the law favors short-term rental operators. We don't have to deal with a lot of the landlord-tenant laws, and makes it easier. And when we do have property damages, we're identifying those damages quickly, and we can get reimbursed from the guest, or if they booked on an OTA, from the OTA. It's a lot less riskier when you are a short-term rental operator versus a long-term operator. So you have to understand that. Next is going to be market timing. Now, as I mentioned, if you are a long-term investor, as you should be, I'm not too worried about market timing. The reason I say that is because you can buy a property, and we've discussed this on other videos. Like I did a video with Corey Prince, who's an investor in North Carolina. You can look it up in my podcast. And he talked about how one of his first investments was an investment that he should not have bought, but he held on to that property long enough to recoup the damages and was able to make a profit out of it. Again, if you're looking long-term, you can make mistakes in the beginning, like overpaying for a property, because in the long run, 10, 15 years down the road, you're going to make that money up and then some. Now, if you bought right from the beginning, you really get a big profit, but nonetheless, you're not going to lose money. Next, I kind of touched on this before, is how you're going to finance your deals. Like today, interest rates are super high. So financing deals the conventional way becomes very difficult, which in turn becomes difficult to find cash flowing properties. Now, there's ways you can mitigate this as well. For example, I mentioned one of the strategies is to buy a property, actually live in it for a couple of years, fix it up, do some renovations, increase the equity in it, and then sell it, especially when the interest rates are high. Or you can go ahead and do some kind of variable loan, in which you can start with a lower interest rate, do what you need to do with the property, and then put it back on the market. But understand that's a little riskier because the time frame is shorter. Again, for me, investing in real estate is always going to be a minimum of a 10-year deal, 10 plus years. And then we have to make sure that we market and sell when the market is high, which in most cases, it doesn't matter if it's high or low. If you held it for 10 years, most likely you will still make money. The last thing I'm going to talk about is your tax liability. Within a property, when you're investing in real estate, you're going to have depreciation. You're going to have some of the deductions that you can save taxes on. But when you sell, you may have to deal, depending on what where you are, it's deal with capital gains. Or you can do what David Green did, do a 1031 exchange. Again, look into those things, but understand that your tax liability can be a good thing, but it can also be a bad thing depending on where you are in the market. Well, my beautiful people, hope this was definitely useful. If it was, hit that like button. Subscribe to this channel if you haven't subscribed. Follow me on Instagram if you want to donate to the channel. Some of the information is down below. We've also, as I mentioned, are sponsored and have teamed up with Dream Vacations. If you're interested in any vacation or you're interested in cruises specifically, we have a lot of big sales on cruises, and just DM me. Let's have that conversation. I love you guys, and I'll see you in the next one.